The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes. And if you have any, and I don't know if you know it, but Monday is like extension deadline. Effectively, it would be tomorrow, but because it falls on the weekend, you have till Monday. So Monday is extension deadline, and if you need to get those taxes in for 2017, for 2016. It is 17. You can call us at 632-7886 on Monday, and we will get her done. And I think you can hear that Tiff and Chris are in studio. Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Amen. That's for sure. And Christopher Fabian.
Hello, Esther.
So I heard you were down at the walk today in Lewiston.
I was down in Lewiston at Art Park. It was started off as a really ucky type of morning, but sun came out. Pretty good day. Can't complain.
So this was the walk for Alzheimer's.
Another
right?
walk for Alzheimer's. Yep.
Against Alzheimer's. Right?
Yes.
So that was a really good
Raise
thing.
money.
Okay, and we got our tax school that started up this week, and we still have one more class available. Is that correct?
Yep, it's a Saturday class, and it starts in a couple of weeks, and it's a great opportunity to learn taxes from A to Z, and it's trained by one of our staff members who have been with us for over 10 years, and the idea is that we hope that you will come on board and be our employee, and so it's a great opportunity. I started my tax class this week, and I go around the room and say, what is your experience? And it's a whole mess of people. There's a home health care aide in the classroom. There's a teacher who's retired, just a whole smattering of people, So
and it's a great opportunity to get a hold. I think you'll find how complicated the tax law is and how they try to be equitable in the tax law. If you have this happen, they say, maybe we should give you a tax break for that. And it helps you in your finances, too. So if they should be interested, is that still up online that they can register online, Chris?
It is. Yes, it is.
EGTax.com. Click on Taking Tax School, tax information, and it's right on our website, EGTax.com.
Now, the Saturday class it's once a week, right? It lasts for a longer period of time?
Yeah, once a week from 9 to 3.
Right. So in case and if you're boycotting the NFL like I am, it just helps you to say, I got something I'll study on Sundays instead of watching and then I looked today, the Sabres are like
terrible.
They have 1-0.
Yep.
Is that correct? And tied 1 and lost 3?
Yep.
Oh,
that's correct. We're just a fun town.
They're
what can
building.
we say?
They're building.
Yeah, they've been building for 12 years. But anyway, Mr. Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Want to give everybody good news. There's going to be a $25 increase on average in your Social Security starting next year, so that's good for seniors on a fixed budget.
And
I want to let everybody know that.
While you're speaking of seniors, Mike and Glenn and the financial guys are going to have staff members in our office, and they can help seniors sign up for Medicare, because right now it starts Medicare open enrollment. So if you need help with that, it doesn't cost anything, and they're right in our offices. So it's a great opportunity to come in and help somebody professionally help you.
If you're on Medicare and you're confused about what to do, which other program to
what's
to
the
choose,
best plan?
Right. What's great is these helpers, so to speak,
navigators, come
in and they basically find out how your health is and what you need, and then they match you with the best plan, and there's no charge to you. So this is something that's funded through Medicare, and it's absolutely great. So should you want to come into a couple of our offices, there's the Niagara Falls, is it the Lockport office?
Niagara Falls Factory Outlet Mall, our corporate office in Amherst, and our McKinley Mall office in Blaisdell.
And do they call us or do they call the financial
They
guys?
call the financial guys.
And if they called us, it wouldn't be a bad thing. We'll just connect
Right.
them.
We'll connect you. So you can call us at 632-7886 or call the financial guys and their phone number.
633-1515.
Oh, how
And we're not
cute the way
twins.
you did that. Your husband and wife. Okay, today
And
I
then,
thought,
also,
Yes?
sorry, don't forget, hopefully next month our new app will be out.
Oh, and we have such a cool app. Like you can scan in your receipts,
Yep.
and it'll keep track of the bookkeeping. You can use it as an odometer from beginning and ending for your business expenses. It has all the tax phone numbers and tax laws on there. It's absolutely a great opportunity, and you can put it right on your phone, and it'll give you our phone numbers. You can make appointments.
Yep, we'll keep you
online. It's
updated
remarkable.
instantaneously on tax law changes.
Right, which should be coming down the pike. Speaking of that, I thought we would try to unscramble. I know every time I listen to everybody talk about the tax law proposal, I thought it would be interesting that people should understand how the tax law works now, so you can kind of factor that into what you hear on the news, so that you can be smarter than the average bear. I think, let me tell you what the changes are. 3 brackets, and Trump says a 4th bracket is 0%, but there's a 0% under the present law. 3 brackets, no personal exemptions. So that means the $4,050 you would have gotten for yourself, your spouse, and your children, that's going to be eliminated. The child tax credit, as far as I can see, is going to be the same. There's going to be no itemized deductions except for mortgage interest and charity. There's going to be a new credit up to $500 for taking care of an elderly taxpayer. Corporations will have a maximum, they're looking at 20% for corporate taxes and 25% for S-Corp. So if you have a corporation that passes through on an S-Corp, that net profit will be taxed at 25%. If you have a regular C-Corp, it'll be at 20%. They're looking at a kind of a repatriation tax to bring money back into the United States if it was parked offshore because you had a business out there of about 10%. No estate taxes, no alternative minimum tax, and of course I wanted to point out that the health care law is still regulated through your tax return. There's no personal exemption, and they're going to double the standard deduction to $12,000 if you're single, and $24,000 if you're filing a joint return. But let's look at how that works right now. If you are a single taxpayer right now, your standard deduction is how much?
$6,350.
I think it's going to be $6,400 next year, right?
60. What I printed online was $6,350 for next year.
No, I looked at 60. All right, but
Okay.
let's say $6,350, and your personal exemption is $4,050, right?
Yep.
So that means that your standard deduction right now is like $10,500, right?
Right.
If you're
Combined.
single. So your personal exemption and your standard deduction added together means you pay 0% until your income is $10,500. So they're increasing it to $12,000, so you end up with a $1,500 extra deduction, correct?
Correct.
All right, and so that would mean if you
Well,
were in the 10, yes.
Yep, we have to take a break right now because they're doing a news conference for the missing police officer.
All right, good. We'll talk to you on the other side.
Attention real estate investors thinking of buying or selling real estate investment property. Call RJ Gullo Companies, qualified intermediate.
You looked at me, cocked your head to the side and said I'm angry. 5 days since you laughed at me, saying get that together, come back
Hey,
and
it's
see
Esther
me.
Golias, the tax lady from EG Tax. We just got to really pray for that Divers family and the whole situation there unfolding. And we're going to give you information as soon as it unfolds. But in the meantime, we're going to be we're trying to unravel the mystery of the proposed tax changes. And to do that, I think you really have to understand how your present tax situation is affected. So right now, what they're proposing is that a single person with no exemptions would get an extra $1,500 in standard deduction over over the way it is now. But you have to remember, you have to multiply that by 10%. So the bottom line is it's $150 savings. If you're a married couple right now, your standard deduction is $13,000, your personal exemption is $8,200. So you're getting already $21,200, so they're talking about moving it to $24,000. So that's really the difference between $21,200 and $24,000 is going to be the extra deduction. So you're really only looking at about a $2,800 reduction, again multiplied by 10%, so that's $280. So just wanted to let you know that. Now the other thing is, if you have 3 children, your standard deduction and personal exemptions are $25,300. But if you have 3 children under the new tax law, it stays at $24,000. If you have 2 children, then it would go to $29,400. And again, the standard deduction is only $24,000. If you have 3 children, it would go to $33,500 under the present code, but under the proposed changes, it stays at $24,000. So you end up losing $9,500 if you have 3 children, $5,400 if you have 2 children, $1,300 if you have 1 child. So I thought it was important that people understand that that's in there already. So a family with $33,500 right now pays 0% taxes. So
There's
I just
that.
thought that was
There's that
important to know.
0% tax bracket that the president says he's
Was
introducing.
talking about. It's already in there. It's
Yeah.
already in there. So let's go to the phones, and we're going to talk to Kevin from Jamestown, who's waited so long. Hi, Kev. How can we help you, sir?
Hi, Esther. I worked 30 years at a local grocery store. I was a manager. Got hurt. I'm on Social Security, disability, and I have my pension. And 3 months ago, a truck ran into me, which destroyed my vehicle. He got tickets, and it's the company's fault. I just want to know, I probably might get a settlement between $50,000 and $200,000. How would I get taxed on that, and what would I do?
Now, when it's for pain and suffering, and it's not for lost wages or
Emotional
it's not any
distress.
kind of or emotional distress, if it's for pain and suffering, it's going to be tax-free.
Good news.
Okay?
Yes.
So make sure before you settle
All right,
make sure your attorney writes it up as a settlement for
Pain and
personal
suffering.
injury.
So I can't come to you after that happens?
Well, it's not. You can come. We would love to have a cup of coffee with you, but we're not going to charge you any taxes because it sounds like it's going to be tax-free.
Esther, I might want to switch to you because I have the financial guys already.
Well, I know, but we don't do financial
Well,
planning.
yeah,
Well, how much
it
is
all
your
depends
pension?
on how much your pension is.
How much is this?
If you have to file.
I thought he had no pension.
No, he
No,
said he had a pension.
Social Security and pension.
Oh, how much is your pension?
I think altogether it's like $2,300.
Including your Social Security?
With a disability and pension, yeah, a month.
How much is your disability, Social Security disability?
About $1,700.
All right, so your pension is $600 a month, right?
I'm there, yes.
So are you single?
I'm divorced.
Okay, no children at home.
He can roll it up to wages.
Any children at home?
Out of Brockport, and I own my own house. I only owe $20,000 on it left.
But no children live with you, correct?
No.
All right, so you'll be able to get an earned income credit if you're under the age of 65. Are you under 65?
I'm good at 59 right now, Esther.
All right, so you do get an earned income credit. So that you want to make sure. So yes, you can come see it.
And have you been filing, Kevin?
Yes, and if I file, but I haven't paid anything the last couple.
Yeah, well, they should have given you a refund. Have you been getting refunds?
Any refunds? No.
We should bring your last few years returns too. We'll take care of it.
Because
14, 15, and 16.
There's a special caveat with the law. If you're disabled, you get to roll it up to wages and possibly use it for earned income credit. So there's a possible credit on the table.
Wow.
Yeah.
Okay. I'm
Okay.
going to you guys.
All right, I'm very sorry to hear about your accident, but let's hope that you have a great big fat settlement. Okay? I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone.
Hey Esther,
Yes,
I wanna say that somebody texted in that somebody said that Esther makes the new changes much more understandable.
Well, that's good, and that's what I wanted people to
Yeah.
understand is, They talk about this gigantic tax break, but I will tell you, and we're going to give you some examples here. The people that benefit are the people that have no income,
No
and
children.
and no children, and no.
They don't itemize.
No home, just simple standard deduction. They benefit, and a single taxpayer with no children benefit. The rest of everybody,
Families?
especially people in New York State, not so much. Not so much. So why don't we, again, 8030930, 8030930, star 930 on your cell phone. Okay, under the Trump law, if you make $50,000, you're single and nothing, you own nothing, simple, you're going to save $1,000.
Yep.
Okay? If you're married filing a joint return, income about $80,000, you're going to save about $1,200.
And that's with no kids, no house, just
Nothing,
standard deduction.
just nothing.
Yep.
All right, now, if let's see, what's my next one here? The $80,000
Married, 2
with
kids.
one child, right? $80,000 with one.
Oh, okay, 1 child.
One child, and they would, let's see, they save. They
$125.
Right, $125.
So the far cry from the 1,000,
Right, and that's the whole thing, is they keep talking about these thousands. There is no thousands. But the people that lose are people that have property taxes, that have high New York State taxes, medical bills, is people with employee business expenses.
But if you're a business
travel-
owner, you win.
well, if you're a business owner with a
Corporation.
Right.
You have to have a corporation, and people that don't have corporations really ought to think about it, because you want to move to a corporation, a pass-through corporation, because if this thing goes through, the maximum you're going to pay is 25% on an S corporation, whereas if it's a sole proprietorship, of course, they may write that in the law. I don't know right now, because the details are so sketchy. They don't really give you much to go on, but from what I can see, there is no thousands of dollars in benefit, especially people that have medical bills, seniors with that have people in a nursing home. I know we had one example here that somebody who had a person in a nursing home, they would lose $4,367 by the new Trump plan. So I just want you to know that when you're in New York State, and they talk about making this all fair, it's interesting when you make $50,000 and you're single with 1 kid, single with 2 kids, if you have 3 kids, 4 kids, 5 kids, the tax stays the same. It's the tax is $45.60, and that's how much it is on $50,000. If you're married filing a joint return with $80,000 and you have 5 kids, the tax is $67.20. There's no benefit for all of those things that might happen to you. So if you're somebody that is that has large employee business expenses, maybe you're paying your stockbroker for managing your portfolio, maybe you're paying $12,000 in property taxes in New York State, maybe $8,000 in New York State taxes, that all goes by the board. You pay $6,720 no matter what.
Yeah,
now,
and the people it really hurts is New York State. I was doing a tax return yesterday for somebody who had an extension, and her property taxes were $11,000 a year, and so there goes all that write-off for the $11,000.
That's right. And so really there's no incentive to do things to reduce your tax liability, because if they eliminate the itemized deductions, contrary to what they say that's a big loophole for wealthy people. What happens to wealthy people when they have itemized deductions, you guys?
The AMT kicks in.
AMT kicks in.
And they start phasing out.
And they start phasing out your itemized deductions.
Yep. Right.
So I believe at around $350,000, you start losing most of your itemized deductions.
And not to mention you lose your personal exemptions too.
Yeah.
Right.
So,
Well, we're talking in unison today.
I know.
Right. Yeah, you guys are. So I wanted to let people know that it sounds great, because they say we're giving you $12,000, but it's rather than $11,000. and they're giving you $24,000 rather than $22,000. So it's not that much, and then you have to multiply the extra money that they're giving you by the tax bracket you would have been in, and that was 10%, because that was the first layer was at 0%. The next layer is at 10%. So you'll find out that it's just not much money at all. I want to let you know that. I'm Esther Gillies, the tax lady, 8030930, 8030930, star 930 on a cell phone. We're going to break for the news. We'll be back on the other side. The tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. And I guess what I'd like to do is encourage you, if you are having questions about how this proposed change affects your bottom line, and it does affect your bottom line. The other thing, there is also a conundrum between New York State and the federal. You guys want to help me out with that one?
Right, because New York State, a lot of their forms feed right off of the federal. So your itemized deductions, your medical are part of your New York State itemized deductions. Your job expenses are part of New York State itemized deductions.
Right,
Yeah.
and so if you're not itemizing on the federal,
Then, those are...
and New York State standard deduction is only $13,000 versus the 24, you are already behind the eight ball by a lot of money, by $11,000. Right?
Yep.
As far as taxable income to New York State. So that's a big thing. And so you want to make sure that you talk, and I was listening to the talk shows the other day. They almost pull my hair out when I'm listening to them, because they talk about this gigantic middle-class tax cut. There is no gigantic middle-class tax cut. I will tell you who's going to make out is the corporations. People that would have paid alternative minimum tax. Now, who would pay alternative minimum tax, you guys, before?
Somebody making quite a bit of money who has lots of itemized deduction.
Right. They would have paid alternative minimum tax. The reason they eliminated EMT is because there's no itemized deductions. Right?
That's exactly
and
right.
And the other people that are going to really make out is people that have large estates. You don't pay an estate tax right now until your estate is like $5.4 million. So they've eliminated that completely. The other thing is the corporations will pay at 20%, and as opposed to close to 39%. So that drops the tax rate on a corporation to 19%, which is great. That's great from an economic standpoint, but that's who's going to make out is the corporations. Somebody with an S corporation making $1 million is going to save about $140,000 in taxes. That's a big tax break.
Yeah, and I think that's part of his ploy is that you can get more corporations to come back to the United States.
And that's true. So if you're going to really do a tax break, don't do it on the back of the people, the little people. I mean, I hate to say it, but it's true. A mom and dad and the kids, they get no tax break. I mean, the biggest break they had was children, right? And what do you do if Aunt Gertrude goes to OTB and she wins $15,000? That's an itemized deduction.
Yeah.
She doesn't get to take that anymore as an expense. So Gertrude has to pay taxes on her $15,000 in gambling income?
Boy, I can see those gambling people they're lobbying for this to not go through, or at least they should be lobbying for it.
I think when they start debating this, have to debate this, I heard them say that it isn't fair that a high tax state like New Jersey, New York, California, who are so, like for instance, New York right now is afraid of losing the subsidies, right, for the health insurance.
Yep.
Because New York was their hook, line, and sinker up for those subsidies. If they get rid of those subsidies, New York is in a world of hurt. By the same token, the people that live in New York State, that work here, they have no choice. This is where your job is. You're stuck paying the high property taxes and the high income taxes in New York State. And it used to be that they said, gee, if you're stuck in one of those states, you get to take it as an itemized deduction to make it fair. Now, the guy in Florida who pays zero taxes in state taxes is going to pay the same as somebody living in New York State in federal taxes, you know?
That's not
All right,
fair.
let's go back to the phones. 8030930, 8030930, star 930 on a cell phone. And I think we have Camille, right?
But Jean.
Jean first.
Jean. All right. Hey, Jean, how can we help you?
Hi, Esther. We spoke about this maybe 6-8 months ago. I had a foster child in 2014, and the county never gives out Social Security numbers for foster children. And so I waited, and when we were in an adoption process, I was able to get an ATIN number.
Right.
But you can only get that when you start the adoption proceedings. So what ended up happening is I did not get I filed an amendment for 2014, but it was after October 15th, 2014, because we didn't go into adoption proceedings until December 2015, and it was denied. They gave me like a partial refund, but they wouldn't let me claim, the whole refund. And I guess there was some new law that was enacted in 2015, some kind of...
Chris is shaking his head. Jean.
I'm sorry?
All right, Chris, explain it to him.
They changed the law that they will no longer go backwards to give people money for their children who just got tax identification numbers.
I believe April the 5th, you had to have that number by April the 1st or April the 15th of the tax year, of this tax year, or they won't allow you to go back and retroactively get it.
You could go to October 15th of the tax year. But what it does is...
if you had an extension.
Yeah, but what it does is it basically makes anybody who has a foster child in their home, and it could be 5 years. I mean, sometimes people have foster children for many, many years.
And so that goes back again to New York State, because that is kind of a state thing. The state of New York is so worried about protecting the identity of everybody that they will not force the parent, the natural parent, to give up that information. And it really puts somebody like you who's trying to be a good guy and adopt a child or foster a child to have to get no benefit for it. So, but now here's the thing. If what Trump is proposing goes through, it won't make any difference anyway.
Why?
Because you're going to get no benefit for having children.
Oh, okay.
So, but except for the child tax credit.
You know what, Esther, would it have behooved him to file a paper return and not put a social to keep the year open, Chris? No.
You had to have the live Social Security number
or
by the
EIN.
end of the year plus extensions.
And he said you can't get the EIN until you start the adoption process.
Right. So I don't know. Keep your ears to the ground, because I do think that this is going to end up being a hot potato in Congress when they start negotiating this, because there's a lot of senators and representatives in high tax states, people paying high property taxes, high income taxes, that the people really are just going to get shafted, or people with a lot of children. I mean, 2-3 children. You get 4 children, you don't get anything anymore for children if this law is passed. But I appreciate your phone call.
Okay, all right.
Thank you, sir. Good luck. Okay, let's go. Let's see. We're going to take a short break. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. We'll see you on the other side.
And you're going too far, 'cause you know it don't matter anyway. You can rely on the old man's money. You can rely.
Hey, I'm
on
Esther
the old
Golias, the
man's
tax
money.
lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And we got Camille, who has the patience of a saint. Hi, Camille. How can we help you, my dear?
Hi, can you hear me?
I can hear you. Can you hear me?
On my OnStar. So my question is, I heard you talking about the new tax laws. I just turned 59. I have health insurance, but it doesn't cover all my expenses, and I end up having to, over $3,000 worth of medical expenses that my insurance doesn't cover. With the new tax laws, are you trying to tell me that that's not going to be, you no longer can get that deducted?
Okay, so what won't be deductible, if this goes through, is no medical, no property taxes, no sales taxes, no income, New York State or state and local federal taxes.
So you are correct, Camille.
No casualty losses, no business expenses, no expenses that you would have paid to your stockbroker, no employee business expenses, no office and home, no gambling. I mean, it goes on and on and on. So you are absolutely correct. You would not be able to deduct that if it goes through. But again, it hasn't been debated, and I think that what I want people to know is the way it's written, it is not a middle class tax cut. It is it's interesting because I'm a conservative. It is an upper class tax cut, upper 1% tax cut.
So
okay,
if it did go into effect, would it affect your taxes that you do this year, or
I don't know. Now I've heard that they're going to vote on it on Christmas Eve, so I don't know. If they may make it retroactive. If they would, there would be a lot of companies that would, have to rewrite all their software and everything. The Internal Revenue Service would have to re-gear because it'd be such a sweeping change. So I don't know if they will make it retroactive. But right now we're on the old system moving forward. So I will tell you, people that have casualty losses, this would be the last year to take them.
So
medical bills, last year to take them, if it passes.
So basically, me being a single person owning a home, I'm going to get nothing out of the deal.
You'll get
Mortgage
an extra
interest.
$1,500 standard deduction.
Right, but if you're used to itemizing, you could end up losing.
Right, and especially when you add New York State into the mix, it becomes it ends up being, if you were going to get a tax break of maybe $400 or $500 on New York State, you could lose that.
Okay, I have one other question. I have a 401k. Is there some kind of thing that if you go to 59 and a half, you can take money out of your 401k without being penalized? Or what is that?
Yep,
Yeah,
that's
I mean,
right.
once you're 59 and a half, if your employer will allow you to take money out of your pension plan, maybe due to a hardship, then that distribution is going to be taxable. But it will be tax-free on New York State for the first $20,000, and on the federal it'll be taxable, but you won't have to pay the 10% penalty.
Okay. All right.
Okay.
Thank you.
All right, you're very welcome.
Thank you for
just
caring.
want to make I just want to make sure that people understand that taking money out of your pension plan is not a good thing until you retire. So even though it's in the law that you can take it out without a penalty, look at other means of paying emergency bills if you can at all possible. Okay, let's go back to the phones. We'll talk to Carol. Hey, Carol, how can we help you, ma'am?
Hi, how are you?
Good.
I had a comment. It seems like we're not a democracy anymore, and we're under a dictator, and it's become a dictatorship. And because everything that he's done, and he just lies, and like you've already mentioned on your program, it's a tax incentive. Everything is for the rich. Now, I'd be happy if he wants to take away all the middle-class tax deductions, if they take away all the hundreds of deductions the wealthy have.
Yeah, well, that's the whole thing. I am a conservative, and so I have always been a Trump supporter, and I'm hoping somebody does something to benefit the lower class, because and the middle class, where people really need the money. But to sit there and for the politicians to say this is a big tax cut, it isn't. It is a big tax cut, all right, but it is not for the middle class and the people that are closer to poverty level. It is absolutely something that's going to save upper income people all kinds of money, and for that I'm very disappointed. I will be very frank with you. If it was going to really be a tax cut for the middle class, great, but it is not.
Right, and their health care reform is not anything that's going.
Well, the health care reform is another problem, but it's like Congress has they have no backbone because they're so worried about keeping their job.
Yes.
Get away with just being a dictator and
well, I mean, I don't think he's acting like a dictator. I mean,
that's just been going on in the White House for a long time.
Obama did executive orders too, and unfortunately, this was the only way that Trump could get the Congress to move. So if that's what he's doing, he's trying to get these people to come to the table for health care, that would be great. But I will tell you, when you hear it's a middle class, lower income tax bracket savings, it is not. So I thank you for your call. Let's go to line 4. We're going to go to Mike in Cheektowaga. Hey, Mike, how can we help you?
How you doing, Esther?
Good.
Sir, I got a question for you. Last year, when I submitted my federal and state tax returns, I got my federal back. Now, I've been filing taxes for 32 years since I've been working. And for the past 22 years, I've held the same job, same company. And last year was the first year my state taxes were held up because they wanted copies of my
W-2s.
I called them, Mike, last year to ask why such a rise in that, and they told me that it's because of identity theft and that they want to make sure that it's really you and they're protecting you.
But really, I think what it is it's called holding up your refund.
But they're protected.
And I'm going to tell you, anybody, and you can change this, Mike. You can change your W-4 at work so that the state of New York doesn't get so much money every month, so that there isn't a big refund. Maybe you owe them $50 rather than they owing you $200 or $300. This way, you switch sides of the table. You become the payer rather than somebody waiting for the refund. Then there's nothing for them to hold up your refund about. And it's very easy to change your W-4, and that's what we suggest people do. Don't sit around hoping they're going to send you back your money. It is your money, and you can control it through withholding.
And then once you send them your W-2, it takes, 90 days?
120 days.
120 days, Mike, from when you send it in.
Right.
Isn't that shameful?
And as the state gets tighter, as this whole thing unravels,
if they lose
especially if the
subsidies,
the health insurance subsidies don't come through, it is not going to be a pretty situation. So anyway, but change your W-4 at work will help you with that, okay?
I do have one last thing. My salary has been the same for the past maybe 12, 15 years, and it varies from year to year, but not much depending on overtime. And being single and no dependents, usually my salary, my yearly salary varies from like 120 to 130, and depending on how much 457 plan withdrawals that I give to the plan that are taken out of my check. And I thought maybe because I reduced that is why they wanted my W-2.
No, not at all. No, they did that to thousands and thousands and thousands of taxpayers. You're just in a group with other people. I will tell you, if I were you, I'd change my withholding. Truly. Okay?
Okay, thank you.
All right,
You're
thanks,
welcome.
Mike.
Thank
Not
you.
the answer he wanted to hear, but that's...
I mean, the thing is, why send your money to the state and the federal and hope to God they're going to send you back your refund? Be in control, get the money as you earn it, and then at the end of the year get a smaller refund or get no refund, something where it's a yawn at tax time that you don't say, oh man, I got $1,000 coming back. I would think $10 is a better number so that you get $990 up front as you earn it. That's the better thing to do, right?
That's right. Yep.
All right. And so, last things people can do this year is call your senator and congressperson. Obviously, Schumer hates this whole plan of Trump, but I think he hates it just because he hates Trump. Well, I don't really hate Trump. I just think that this whole thing, it is the biggest tax cut in years, but it's not for middle and lower income people. It is for upper income people. If you put a pen to the pencil, it just doesn't flesh out the way they say that it is. So you want to make sure that you call your senator. If you need any help with your particular situation, you can call us at EG Tax and we'll tell you exactly how your tax situation will change, if at all, with the proposed tax law changes, to see if it's better or worse for you. And, we're happy to do that, and there's no charge for that. But things that people can do Remember Monday's extension deadline. You can call EG Tax, will help you. Make sure you maximize your pension contributions. This is the last quarter. That stays in even if the tax law that they're proposing is passed. Make sure you pay your New York State estimate before December 31st if you're an itemizing taxpayer, because right now it's still in the law, so that'll get you a little larger itemized deduction. If you're an itemizer, make sure you get your medical bills paid because it's still deductible. Property taxes. Charity's going to be, it looks like, deductible either way. I don't know whether it'll have to exceed $24,000. Nobody said that. Did you guys catch that? Is it going to be over and above the 24?
I would assume it would have to. Who knows? I
mean, because is it 24 plus charity and mortgage interest, or is it your charity and mortgage interest have to exceed 24?
I would think the later.
Yeah, that's what I'm thinking.
Wow.
So employee business expenses, make sure you get your expenses all paid before the end of the year. Other business expenses, office and home will be gone then too, right?
Yep. Use your flex spending accounts.
There we go again, Chris.
Wait, what's wrong?
Oh, nothing. We said the same thing.
Use your flex spending accounts.
Well, you guys live together, think together, work together, right?
Yeah.
Defer income to 2018.
Should we go to Sharon?
Do we have got another call?
Yes.
We got 3.
All right. Oh, we got Sharon. Hey, Sharon, how can we help you?
Hi, Esther. I'd like to know what the Trump tax plan is going to do. I use an HSA to reduce my taxable income. I contribute myself, not through.
That's good. That will be good because that is not an itemized deduction. So anything you can do to get it out of your W-2 is going to be to your benefit. So that would be one of the things that people definitely should look at is their HSAs and their cafeteria plans where they can put pre-tax money away and they won't have to pay taxes on it.
Okay, so nothing's been changed with that?
Nothing yet so far.
Okay, and when you use that $80,000 amount, you're talking adjusted gross income, correct?
I was talking about adjusted gross income, then we're going to take off the standard deduction, and that's it. So that's it. So a couple with $80,000, they are going to have that same liability, whether they have one child, 2 children, whether they own a home, whether they have employee business expenses, whether they have gambling expenses, large medical expenses. It is going to have, they're going to have a tax liability of $6,720. That's it. Then from that would be their child tax credit, which looks like it's going to stay the same.
Yeah, we don't have any children, and we're usually like total gross. We start out at about $100,000 before any deductions or anything like that.
So then you would be the $100,000 minus the 24.
Okay.
And so your bottom line is going to do at 12%, then 25%, and then or is it 15?
No, 12 and 25.
And 25, and then the next level up to 35.
Or my book.
But what I'd suggest you do is call the office and
I can run the numbers.
We'll run the numbers for you exactly.
All right, great. Thank you.
You're very welcome. Okay.
I'm
Master.
Matt.
Yes, ma'am.
We got Matt.
Matt. Hey, Matt. On line 2. Hey, Matt from Hamburg. How can we help you?
Well, I have a very quick question. I have to put all 3 of you on the spot.
Yeah.
You own a rental property, and you know what's possibly coming down the road. And you have a major project, probably, I don't know, $14,000 to $20,000 that you want to do to that property. Do you do it this year, or do you hold out?
I don't think the rental's changing.
Rentals aren't changing.
Employee, all the business things in a rental property's business is going to stay the same. They're really just attacking itemized deductions, which really was one of the very few things that average people could deduct.
That's right.
And that would have to be depreciated.
Right.
So nothing is changed.
Depending upon if it were.
Well, he's saying $20,000, so I'm assuming.
Right. But I mean, if it were machinery equipment, there is an expense option available if it was machinery and equipment.
Yep. Right.
Okay.
So you're good.
But I will tell you, it looks like if you're an upper income person, that the tax rate will drop next year. So. You want to make sure that you get the deduction this year because the tax rates are a little higher this year.
Yep.
Okay?
Yep, he's all good.
All right, let's go to Robin. Hey, Robin, how can we help you?
Oh, hi. I am so happy to speak with all of you.
Yes.
Thank you.
All of this talk about the proposed middle class tax cut, whatever it's called, my husband and I seem to be in the middle of it because at this point in our lives, I'm 50, my husband is 56, and we earn about $80,000.
Right.
A year between the two of us. We do we itemize. We home, and I have student loans. We have a son that went to college, so his stuff is all run out. But
I think Esther said it best just a minute ago. The person who hurts the most is the only thing that we had going for us is our itemized deductions, right, Esther?
Especially in New York State.
Yeah.
So your tax bill is going to be $6,720. I can tell you that right now. That's it. Unless you have gigantic charity or gigantic mortgage interest, and most people's mortgage interest is low because it's 2 and 3%.
Our interest is low, and we actually donate 10% of our income. So if we earn $80,000 in a year, or maybe $75,000 or $82,000, depending on how much overtime my husband and I can get,
not going to be able.
Percent of that goes to charity.
Wow.
Okay, so it all depends on whether they're saying you have to come up to the threshold of $24,000 and anything over that is going to be allowed as a deduction, or if they're going to say that they're going to allow you to take that over and above the threshold of $24,000. Nobody said. That's why you really got to lay it on your senator and congressman to make sure that they listen to you, because you're a New York State taxpayer paying a lot of money. Okay? Hey, thanks for listening. I'm Esther Golias, the tax lady at EG Tax. You can get us at our website at egtax.com. Until next week, I'm Esther Golias with Christopher Fabian and Tiffany Fabian. Have a great week. We love you. Bye-bye.